Hello guys, welcome to Sendcrypto.com YouTube channel. Thank you for watching. What I want to speak about in this video is questions that we start getting a lot with, and I'm sure it's because of all of the different situations that just happened recently with Celsius and Terra Luna and all of those other companies that we start hearing some rumors about, is that how Sendcrypto.com will be safe. How can we assure to our users and our clients that they can't be in the same situation as the Celsius clients right now in regarding to halt of withdrawals and in regarding to not have controls in their money. So the way that we did it, there is a couple of mechanisms that we integrated inside our infrastructures in order to prevent situations like that, which those are the ones I want to speak about right now. So first of all, we give the ability to have a custodial and non-custodial wallet with Sendcrypto.com. Means that you can choose to basically trust us with your coins and then keep it in the custodial wallet. In this case, you will be insured under our insurance company, which as the beginning starts from up to $100 million. And of course, afterward, we're going to increase it. This is in regarding to insurance of coins. In regarding to transparency, I will touch it in 1 second. The other way that you can be with Sendcrypto.com is with our non-custodial wallet. And then you have your private key. It's your keys, your coins. You are in control. Nobody can touch your funds. Nobody can touch your coins without you are approving the transactions, of course, because you have the private keys. And in any given moment, you can just take it and move it to any other wallet that you want. It's your wallet, your keys, your coins. Now, in regard to our custodial service, why in our case, in our situation, the Celsius and Binance holding withdrawals cannot happen with Sendcrypto.com. Now, let's first of all understand what caused the problem for Celsius and any other companies that led them to the situation that they need to hold withdrawals. What happened is that basically those companies promise and give different interest rates, let's call it, for you staking their coins, right? Different coins, you stake, you get different APYs. How they're able to do it? They're able to do it by basically using your coins into other platforms, lend them or borrow on them, and then use them as collateral to get a higher interest rate, which the one that they are paying you. And then their profit is the delta between the interest that they are getting into the interest that they are paying you. Now, of course, in order for you to get an APY and to get any type of interest, like in any instrument, you have to take a certain amount of risk. This risk sometimes cannot be mitigated. It cannot be controlled. When? In bear markets, for example, when we have a flash crash or a black swan event, something like we're experiencing right now, and that's basically cause their collateral levels not to be enough and then getting into a liquidity problem, which they have to add more liquidity into their positions in order to keep them open and not be forced to sell in a loss. This is one situation that happened. The other situation is that basically, because they are using your coins, they cannot have the risk of getting into a bank run type of situation. Means that if all of their clients, because the market is crashing, get panic and want to withdraw their funds, then they won't have enough coins, funds to put as collateral for their already open position, which is about to be liquidated. So as we can understand, with all of those companies, the real problem is the use of client funds in all of them. If you don't use your client funds, you don't have this issue, right? Because if we have 1 million clients with 1 million Bitcoins, as long as we have those 1 million Bitcoins, if there is a bank run, we just have no clients with no coins. But we don't have that problem of not having the funds of the clients to pay them back. So in our case, in Sendcrypto.com, what we did, we created basically a smart contract, which we call it the public auditor smart contract, which is being deployed from the first day of Sendcrypto.com into the blockchain, to the mainnet. So it's available for everyone. It's public for everyone, which the smart contract, what it does is basically keep on updating every couple of seconds the situation of our custodial's wallet. So basically it has access to our wallets to review them, and basically gives a clear picture of what are the funds that are being held in those wallets, which are the client funds, in those wallets, the client coins, compare to the balances that there is in the ecosystem. So basically on one side, you are able to see that there is 1 million clients which in their balances, they have million Bitcoins. And on the other side, you have the smart contract of the public auditing, which shows you that the coins that are actually in the custodial wallet is matching the balance of the clients in Sendcrypto. So there is a capital adequacy of 1-to-1, which means basically that you have, in any given moment, the view to look that no one from sendcrypto.com have made any type of use of those client coins. So on one side, you're getting full transparency. The other side, you're getting insurance, so you have full security. And on the third side, you got different mechanism of backing up and secure your wallet for any type of malicious actions like hacking, phishing, and all of those things, which we'll talk about in the next video. So thank you very much. I hope it was helpful, and I'll see you on the next one.